Hello, everybody. Please, if you can hear me clearly, kindly let me know so we can commence. Our speaker is available and around. If you can hear me, please let me know so that we can commence as soon as possible. Okay,
Yeah,
okay, okay. Thank you very much.
yeah, could
So,
hear you.
okay, thank you. That's good. So we can commence now. So our speaker is around now, and we'll commence as soon as possible, immediately now. So today's webinar is tax strategy for Nigerian content creators and influencers. Everybody here in this webinar will bear testimony to the fact that um, immediately the new set of tax laws, have been gazetted. There have been quite a lot of commotion as to individuals wanting to know the extent of their liability, how they can, structure their tax obligations, what information they can know, to be better knowledgeable about the various tax laws that we have. And some persons are particularly interested in how they can minimize their liabilities, as the case may be. So previously we had a tax webinar particularly for business owners and HRs and CFOs, but today is strictly for content creators. How you're likely to be charged, how best to structure your tax liabilities and every other thing. So our speaker is here, and Legalify attorneys have put together this webinar to aid all participants to be on the side of the law, to understand these tax laws better. And at the end of this webinar, for those who participate fully, we will give all participants two free gifts, to better understand these tax laws and how it specifically applies to their sectors. We understand that various people, play in various sectors. As a law firm, so we structure these gifts in a way that makes you understand how this tax law apply particularly to your sector or your business area where you play. So in with no further ado, let's invite our guest speaker. She comes in now. Please, can you unmute yourself, please, while I introduce you? Hello, are you with us?
Yes, I am. Good afternoon, Mr.
Oh,
Victor. Good
thank you.
afternoon,
Good
everyone.
afternoon. Good afternoon. So, our speaker is Adiola Yetunde. She's from Bekatili Advisory. Bekatili Advisory. What they do is tax advisory, accounting advisory, and all those other things. So she's here with us, and this particular webinar organized by Legalify Attorneys, which is a law firm, with offices in Lagos, Abuja, and Port Harcourt. So, without any further ado, please let's start this webinar as soon as possible. So, can you share your screen so we'll commence as soon as possible, please?
Okay, thank you very much. Thank you, Mr. Victor, for having me. Good afternoon, everyone. As he has introduced me, my name is Yetunde Adiola from Bekatili Advisory. We are into tax and Bekatili, Nigeria. We have our handles. You can check us up. So, basically, what we are going to be talking about here is tax strategy, how to minimize your tax. I'm going to be sharing my screen shortly with us so I can take us through. And I was having a discussion with my colleague, I think this morning. We're discussing this issue of Taiwo Oyedele talking about they will soon start taxing sex worker. And the thing that came to mind is where we are going to in this country, they are not really interested in what you do. They don't care how you make the money. They are only interested in only interested in, are you making money? How are you making the money? Are you providing a service, or are you rendering a service or providing a good? If yes, then you just have to pay tax. So I'm going to be sharing my screen shortly, and I would like you to just give me your favorite emoji to let me know if you are seeing my screen. If you can see my screen, please just let me know so that we can go into the presentation proper.
Yes, we can see your screen.
Thank you very much. Thank you. So we are talking about tax strategy for Nigerian content creators. The content creators, the influencers, they are not also exempted from this. So if they can tax sex worker, then we should know that everybody is now liable for tax in this country. So we are going to be discussing on how we can, most importantly, reduce our tax liability, not necessarily evading. We are going to be talking about tax avoidance, things we can take advantage on to reduce this tax. And for us to be able to do that, thank you everyone. For us to be able to do that, we need to first of all understand what are the tax, what are the tax we are even paying, the our obligations we need to know. Then we now know how to reduce this tax and how to probably take advantage of some of the loopholes. So Nigeria's digital economic growth has made influencer income taxable under PTA. The thing with a country, not just Nigeria, is when a sector of the company is growing, they tend to want to look at they tend to want to also they're also interested. So if a particular sector is growing, maybe the petroleum sector, for example, the government, they're also interested. Oh, this sector is growing, what can we make from there? So if you remember, like I think 7, 8, 9 years ago, the digital economy, which is where the influencers and bloggers, that's where they actually belong. The growth was not that very significant. As a matter of fact, I think it was after COVID-19 that a lot of people begin to venture into content creators. So as people are interested in this sector, the government is also interested. So you see influencers coming to post houses, you see them coming to post their cars. So as you are showing your followers, the government are also, if these people can afford this lifestyle, they should also be able to pay something to the government. So they are now saying, oh, let's look at this sector. Let's see how much we can also make from there. Hence, they concluded that any influencer that can earn above 300,000 naira annually, they should also be able to register with FRS. So if you're an influencer and you are earning more than 300,000 naira annually, when I say annually, I mean in a 12-month period. So if your total income in a 12-month period is more than 300K, then you are liable to pay tax. So you need to register for FRS, get your TIN number, either as an individual or as a company, if you want to separate your business, your brand from your personality. So I'm going to just talk briefly about the obligations. Also, as we go into the presentation, we are going to understand more about these terms. You have income tax is one of your key obligation. You have VAT, you have withholding tax, and withholding tax is an obligation, but it can also be a credit to you. It's also a way of reducing your tax liability at the end of the year. So your withholding tax, and the last one here is proper record keeping. I'm going to say this again. If there's anything you will do for yourself that you will be happy you do is to keep proper record. whatever you do, whether as a blogger, as an influencer, or content creator, whatever you do, keep proper record. And when I say keep proper record, I'm not just talking about I'll just be writing them down. You need to keep records of all your expenses, keep records of all your income, and have supporting documents to back them up. If you are paying salary, you need to have contracts for your staffs. You need to probably maybe pay anything to support that transactions. If you are going to be buying an equipment, you need to get third-party evidence. You need to get receipts in the brand name. It is very important because all this will help you in any event of maybe tax audits or even the normal financial audit. So we'll be moving to who qualifies as an influencer. Anyone that monetizes their presence online, either Instagram, TikTok, YouTube, blogs, as long as you are making money from being online, you are automatically, they are seeing you as an influencer that should pay tax. So whatever you do online to earn income, to earn money, you are going to pay. And also the threshold, as I said earlier, is 300K. If you are earning more than 300K plus, if it's more than 300K, either you earn monthly or yearly, as long as the cumulative is 300K or more, you have to pay tax. You have to get TIN. And I said earlier, you either get TIN number as an individual or as a company or business name. That's if you decide to separate yourself from your brand. So you can decide to say, oh, I'll be an individual. It's still me. I can't, but you can also decide to say, oh, I want to separate my brand from who I am. So this is my brand. This is who I am. So when you are big brand, you should just go ahead and tax my brand. And it's also important for you not to mix your personal expenses with your business expenses, or let me say your brand expenses. So the legal and regulatory framework, there are framework that guides tax itself. We have the personal income tax, we have the company income tax, and we have other FRS guidelines. I'm going to be talking about the personal income tax. It's a progressive rate for individuals. So if you are operating as an individual, you are going to be taxed under the Personal Income Tax Act. But if you've decided to say, I want to register as a company or I want to register as a business name, then either limited liability company or PLC, as the case may be, you are going to be charged under the Company Income Tax Act. Okay, so at this point, I think I need to also mention, especially for influencers that want to separate their brand from their personal life. It is in addition to registering with FRS for your TIN number, it is important to also register with CAC and you file with them annually. If you register with CAC as company limited by guarantee or limited by shares, you have to file your accounts with them on a yearly basis. You have to prepare your audited financial accounts, then you file this with them to avoid risks of deregistration. CAC, they've been saying they are going to deregister a number of companies, people that fail to file their accounts with them. So you should understand your responsibilities if you decide to go into registering your brand as a company or as business name. So the filings you have your VAT, you have your withholding tax filing, and everything is basically done online now. There's something we call Tax Pro Max. If you register with FRS, they will give you your Tax Pro Max login. So all your filings are going to be on the Tax Pro Max. They're going to be online. Please, I want to know I'm not talking to myself. You can just maybe give me your emoji just to know you can hear me. Hello. Can anyone hear me, please? Just
We can hear you loud and clear.
I hear
all
you
right.
loud and
Thank you
clear.
very much. Thank you. So for filings, your VAT, everything is done on tax format. So if you registered with FIRS, you will be able to, they will give you your login details and you will be able to do all these filings online. I wouldn't say it's a disadvantage because before now, if you want to file anything with FIRS, you need to go to their office. It's like a paperwork. But now it's now online. You can do it from your office. You can do all these filings from your office. The only thing is you have to file as and when, because if you don't do this, the penalties and interest, they are on daily basis. So the more you stay, you don't file your VAT, you don't file your withholding tax, this interest and penalties keep accumulating. So if they are saying, what are the ways I can reduce, how can I reduce my tax liability? The first thing you should do is to avoid penalties and interest. If you can avoid penalties and interest, then you will go a long way in reducing your tax liability. So now we are going to be talking about the core tax obligation. I tried to explain personal income tax the other time, which is the progressive rate. So I know before now, when the Taiwo Yedele, he keeps saying low income earners will not pay tax. Low income earners will not pay tax. The tax is the more you earn, the more you pay. So they've made it in such a way that the people earning below minimum wage, they are totally exempted from tax. So you can see from the slide now, or the first 800,000 is 0%. This is per annum. The amount you are seeing here is per annum. If you earn below 800,000, if you earn 800,000 as a content creator who is operating as an individual, you're not going to be paying any tax. Your tax is at 0%. So the more you earn, like the next 2.2 million, it increased to 15%, 18, 21, and the highest is 25%. So as a content creator, the highest tax you will be paying on your income, that's if you earn above 50 million naira, is 25%. But if you earn below 800,000, you are not going to be paying any tax. You are totally exempted from any tax. The PIT is a progressive rate. It is pay as you earn. That's what they call it, payee. But for organizations, for content creators that decide to say, oh, I want to separate my brand. I want my brand to stand alone. I want to register as a company, as a limited liability company. If you also register as a business name, you will also be charged under the PIT. The only thing is you still need to file with CAC. But if you are just an individual, you don't have any business with CAC. But if you are a limited liability company, you will be charged under the CITA. And the thing they've also done to encourage SMEs. Before now, we used to have small companies, medium companies, and large companies, but the new tax law has divided them into two, just the small companies and the large companies. So you need to know where you belong. And for small companies, what really puts you in that category is if your turnover in a year, that's your total turnover, your total income in a year, is less than 100 million, and your total fixed asset is less than 250 million, you are not going to be paying any tax. You are not going to be paying CIT. And when I mean you are not going to be paying any tax, I mean just CIT. VAT or withholding tax, they are totally different from CIT. So 0% CIT for small companies that have their turnover to be less than 100 million and fixed asset less than 250 million. For large companies, for now, it is still at 30%. Also, although they are deliberating on bringing it down to 25%, but for now, as we speak now, it is still at 30%. So if as an influencer, your brand that you've registered with CAC and FIRS, if it's making more than 100 million turnover in a year, you'll be paying 30%. You'll be charged 30% of your taxable profits. So I'll move to VAT, and I need us to pay very close attention to VAT because VAT is VAT is tax that whether you have VAT to pay or you don't have VAT to pay, you must file. Whether you have anything to remit to tax authority or you don't have anything to remit to tax authority, you must file, and it is done monthly. CIT is yearly, but VAT is monthly. And if you fail to file when you are supposed to, even if you don't have any money to remit, you will be penalized and you will pay interest on these penalties. So it is 7% charge on taxable services. VAT is value added tax. And I'm sure most of us, if you've visited maybe some of the restaurants, or let me say spa, or even some of these cinemas, you will see them charging you and they will add VAT to your bill. So that VAT that they are adding is actually for the government. So they are collecting VAT on behalf of the government. They are collecting tax from people on behalf of the government. So the same thing as a content creator, it is your responsibility to collect this VAT from your, okay, let me say clients now, from the people you are rendering the services to, and remit to the government. I'm going to give you a typical example. I approach you as an influencer to help me campaign or help me advertise my product. And you're charging me, let's say for example, ₦1,000,000. If you are going to be sending me an invoice for me to pay, you need to add 7.5% of that ₦1,000,000 on the fee. So when I'm paying you, I am paying in 1 million in addition to 7.5% VAT. You will receive this money and take the 7.5%, remit to government, and also file. So the thing about VAT is, let's assume nobody pay, actually there is no I didn't collect any VAT, or I didn't even render any service to anybody that attracts VAT, or I actually rendered a service that attracts VAT. However, this person that is supposed to pay me is saying, I am not going to pay VAT. And if I'm not collecting, I can't pay to government. So why should I file? But the law is saying, even if you fall under this category, you still have to file your monthly returns. And the deadline for filing is 21st of the following month. So this is October. All your invoices in October, you must file them before 21st of November. If you do not file, you'll be paying penalties and you will pay interest on that penalties. So we need to be very careful. Every organization, every company must file VAT. So that's the difference between VAT, one of the differences between VAT and withholding tax. Withholding tax is the next obligation I'm going to be talking about. So withholding tax is creditable. You know, I said at the beginning of my presentation that withholding tax is also one of the ways you can use to reduce your total tax liability at the end of the year. That is because it is a credit to the person. So now I'm also going to give you an example for withholding tax. The same example of I'm approaching you, I want you to help me advertise, and you've charged me on this service for ₦1,000,000. So withholding tax now is when you send me your invoice, I'm going to be paying you net of withholding tax. So I'm going to withhold part of your money, which is if it is consultancy or professional fee, where majority of influencers will actually fall. That is what you do, influencers do basically. I'm going to withhold 5%, either as a company or as an individual. It is the fixed rate of 5% for both. I'll withhold 5% and pay you net of withholding tax. It is my own responsibility to remit this withholding tax to the government, but in your credit. So that's why it's important that if anybody should withhold your tax, if anybody should charge withholding tax and say, I'm going to remit, it is very important to follow up with this person. Have you remitted my withholding tax? Are you remitting it correctly? Do you remit it to the relevant tax authority? Do you remit it to the state where I'm actually going to be liable so I can benefit from this the credit. Because if they don't remit correctly, you won't be able to benefit and you will still be charged. You will be made to pay the total tax that you are supposed to pay. So you won't be able to claim this credit. One of the advantages of withholding taxes, you've done series of services for people. Someone has withheld someone withheld 500,000, another person 200,000, another person 100,000. At the end of the year, maybe they all sum up to 2 million naira. Then when you are doing your self-assessment or you are doing your financial, audited financial statements, you have your taxable profits, you now have your tax payable to be, let's say, 3 million naira. So what you will do is to look at your credit. Oh, I have credit of 1 million naira. I will net it off. So instead of paying 3 million naira to government, I'm going to be paying 2 million naira. So that's the way of reducing your tax liability. By the person deducting your withholding tax, make sure the person actually remits and remits correctly. So the last one I'll be talking about here on your obligation as an influencer is the capital gains tax. Capital gains tax is tax on assets, basically. So if you sell your digital assets, if you sell your accounts, or if you even sell your equipment, maybe your camera or any equipment you use on an influencer, as long as you are making a gain on it, you will be made to pay capital gains tax. Capital gains tax and company income tax are now the same. It used to be 10%, but now they put them at par. So whatever companies are paying is the same rate you will pay for capital gains tax. So please, once in a while, you can just give me your favorite emoji so that I will know I'm not talking to myself. Thank you. So I'm going to move on to talk to you about the registration and the compliance. So how do I register? What are the things I need? What do I need to do? How do I file? The first thing you need to do is to obtain your tax identification number. You can do that via FIRS portal or FCTIRS or state IRS. It depends on the state where you are residing. If you are in Lagos State, for example, that's LIRS, Lagos State. If you are in Oyo State Inland Revenue Service. So wherever you belong to, and if you are a company, if you have a brand, maybe you register your brand as a company, then you go to any FIRS office to register. You can get it from their portal. You really don't need to go there. You can register for your TIN number. And I'm sure we are also aware that banks too they will soon start requesting for TIN numbers. So even if not as an influencer, as an individual, you need to have your tax identification number. If they might deny you of even access to your fund if you do not submit this number to them. So you obtain your tax identification number. That's the first thing you need to do. Another thing you do is the documents required. You need your NIN, you need your BVN, you need your proof of address, you need contracts, and you need bank statements. If you are going to be filing, if you are going to be calculating your income, you need all of this. Because it's through your bank statement you are able to know how much do you really receive from your services. Then we have the filing through FIRS e-platform. I mentioned earlier, Tax Promise platform. It's actually very easy. They made this easy for even a layman to be able to navigate through it. So it's just where you can file your filings. The withholding tax is done on Tax Promise. The VAT is done on Tax Promise. And all this, especially withholding tax and VAT, they are done monthly. The only difference is withholding taxes if you have anything to file, but VAT, whether you have an amount to pay or not, you have to file. I am emphasizing on this VAT because a lot of organizations believe that if I'm not paying VAT, I am not going to be filing. So you need to file VAT whether you are paying or not. So how to calculate taxable income? I'm going to talk for individual, then I will talk for content creators that are separating their life, their individual life from their brand life. As an individual, what you do is self-assessment at the end of the year. So you do self-assessments, you calculate all your income vis-a-vis all these documents that I mentioned earlier. You calculate your benefits in kind. If as an influencer, someone bought you a car, you have to value it at market value and add it to your income. You will disclose all the trips at market value. You disclose any gift they are giving you at market value. So you will put them in the self-assessment form. You will assess yourself, or you meet a tax consultant to say, assess me, let me know how much I'm supposed to pay tax authority. So they will calculate and you will pay. But also remember that you might have withholding tax credits. Maybe someone has removed from your income some withholding tax. You can use that as a credit. So that's for an individual. Let's move to those that have registered their brand as a company. If you registered your brand as a company, so it's XYZ Limited. That is the name of the company. It's a brand. All your revenue, you have to declare them. All revenue from all bank statements, your brand dues, your payouts, your ads, any amount you receive, you need to declare them. But also, you are allowed some deductions, because if you are going to be doing all this, that means you've also incurred some costs. There are allowable deductions, and there are also non-allowable deductions. I'm going to say it again. In anything you do, make sure you keep documents. Proper documentation cannot be overemphasized. Because if you have all these deductions and you do not have documents to back them up, they are going to disallow them. Because what will make us believe or understand that you truly incur these expenses is when you show us documents, when there's something that can back it up. So you have allowable deductions of equipment, of your internet, of travels, of salaries, of home costs. So I'm going to give you examples of documents that can back up equipment. For example, you bought your camera as a company, XYZ Limited. So I'm going to want to ask, where is the third-party evidence? It's just the receipt, the normal receipt they write, or the invoice. You are presenting the invoice to me. I want to check, is the invoice truly to XYZ Limited? Be careful when you are buying things on behalf of your company. Make sure you are buying in the company's name and not in your name. Because by the time you buy in your name, it is going to, when you are buying your name, it can be void. So whatever you do in your company's name, the receipt should be addressed to XYZ Limited, so that they are not going to disallow their expenses. So for your internet, you can have support. If maybe it's MTN that is providing this internet for you, for example, tell them to give you their invoice. Always ask for supporting documents. For salaries, I want to see the contracts. I want to see the promotion. I want to see the files of your staff, their contracts, and I also want to see evidence of the net amount being paid from your bank account. I also want to see payee remittances, pension remittances. Your staff can either be contract staff or full staff. If they are contract staff, I want to see evidence of you paying their net, evidence of their withholding taxes that you are remitting. So I'm saying it again. Keep proper documentations. If you are not able to prove all these deductions, what a taxman will do is to take all your revenue and just put a percentage to them, and you are going to be paying percentage of that whole revenue. You won't be able to deduct any of these deductions. So I mentioned earlier, you record non-cash benefits. If you are giving any gift, if they are sponsoring you on a trip, if they buy car or house or anything, land, you need to value them. And also disclose them. Disclosure is very important. So I'm moving to filing and penalties. The deadline for filing is 31st March annually via Promax. So by 31st March, you should have filed. If you do not file, you'll be charged penalties and interest. And the I wouldn't say annoying thing, if you are not filing and they penalize you, you will also be paying interest on that penalties. And the interest will be like, they will see like you are owing government. So they will also want to charge you interest on that amount, on what they are penalizing you for not filing. So even if it is zero filing, I'm not supposed to pay tax before. Maybe I fall under small companies. My revenue is less than 100 million. I'm not supposed to pay tax, but it is still my responsibility to file. I did not file by this deadline. The next day after the deadline, they start adding an amount, maybe 50,000. By the second day, I'm seeing 51,000. The third day, I'm seeing 55,000. They will see that money as you are owing us. So they will be adding interest on the penalty, and you will still pay the principal amount. That's if you have anything to pay. So the documents are bank statements, your receipt. I've mentioned receipts before, third-party evidences, your valuation of in-kind benefits. The penalties for late filing is from 50,000 naira. That means it can be more. It can be more than 50,000 naira. So the minimum you will pay is 50,000 naira. So imagine for a small company that is not even supposed to pay anything, they're already calculating penalty of like 1 million naira for you. You'll be wondering, where is this penalty coming from? So you need, and the penalty, the interest is currently computed annually at statutory rates. So they will calculate your interest based on the rates. They will calculate your interest like you're borrowing money from a bank. That's how they will calculate interest for you. And it is now online, so you're not talking to an individual. It's like a computer that is generating this interest for you. You cannot even say, come now, I'm not supposed to pay this. You have to, because you are not even able to negotiate with the computer. It will just bring it out, and if you don't clear it, it keeps adding up. Another penalties you can face is under reporting. If you are supposed to, let's say you have a due, it's the total amount is, let's say, 200 million, and they now gave you some benefits in kind that sum up to 100 million. You decide to say, I'm not going to disclose this one. You have underreported. If they investigate and you are culpable, you will pay penalty you will pay that amount, and you will still pay 10% of the assessed tax. And if you don't pay on time, you will still they will still charge you interest. The last one is evasion. I explained to you from the beginning that I'm going to be teaching you about tax avoidance, not evasion. They are two different things. Tax avoidance is legal. Evasion is a criminal offense. In short, they can imprison you, they can jail you for evading tax. Evasion is when you don't want to pay tax. Avoidance is when you are looking for a way to reduce your liability. Something like what we are doing now is a form of avoidance, because we are learning how to, what can I do to make sure I'm paying the minimum tax? But evasion is, I don't want to pay tax. So after all, what are they using the money to do? They can jail you. You can pay fines, or you can even do the two. It can be both fines and imprisonment. It is under the FRS Establishment Act. So evasion is a criminal offense. If you see anybody evading tax, tell them that please pay tax. I don't want to come and visit you in prison. It is a criminal offense. So I'm going to move to deductions and allowances now. Up to 25% of gross earnings can be deductible when properly documented. I've been talking about documentation, proper documentation. I will keep, if this is the only thing you are going to take away from this webinar, it will help you. Proper documentation, especially if at the moment you are not able to afford a professional accountant to help you make sure you document. You have, or either you are keeping them in hard copies or you are keeping them in soft copies. Either you keep them on cloud or you just keep them on your system. Make sure everything you do are properly documented. Because if there's no documentation, you don't have evidence. We can't take your word for it. And whatever amount you are spending, always make sure it's a bank transactions. Let it go through your bank so that at least you have something to fall back to. Your equipment, your internet, your software, your production, your travel, your rent, your utility bills, all these things can be used to reduce your income. You can tell them, okay, in the year, this is what I spent on internet, this is what I spent on utility, even your security. This is what I paid for rent. This is traveling, airport taxis, air travel, car hire. If you use anything you do, even in your staff trainings can also be claimed. They are all allowable expenses. And the last one is use withholding credit to reduce final liability. If someone has deducted withholding tax from your total invoice, follow up with the organization, follow up with the person. Make sure this person remits this money to your credit so that you'll be able to use this to reduce your final liability. So I'm going to be sharing with us common mistakes to avoid. I've said some in the course of the presentation, but I'm going to say them again. Mixing personal and business expenses. Do not make this mistake. Separate your personal life from your business life, especially if you have separated your brand, if you've registered your brand. If you want to make a business call, please use the business line. If you want to make a personal call, use your personal phone. Do not mix them. Do not say, oh, I can't even remember how much I've spent from my pockets for this business. Nobody cares. You won't be able to use them to reduce your taxable profits. Always separate your full phone, separate everything. Phone bill without work bill. Whatever you do, whatever you are doing for yourself, if you are going to be buying lunch, maybe you are in a meeting, it's a business meeting, you want to buy, do not use your money. Use the organization's money. And if you also want to buy yourself, you want to treat yourself, just this thing, don't spend from the organization. Don't just take money from the organization that is not for the purpose of the organization. Omitting foreign earnings. If you receive some amount in USD or in pound sterling or whichever currency, please disclose. If you do not disclose and they are able to investigate and you are found guilty, they can charge you based on tax evasion. They can fine you, they can send you to jail, or they can even close down your account. Tax authority, they've been given that authority really to do all these things. Because the government, they are looking for money, and anyhow they want to get it. They really don't care whether what you are doing is legitimate or not. Their own is, do you have money? Give us our share. They want to collect their own share of the money. Then ignoring VAT, especially if your turnover has crossed turnover 25 million. Do not ignore your VAT. Always make sure you file, whether new VAT returns or you have some amount you are remitting. The last one here is inflated expenses or missing receipts. Don't travel. Maybe your travel cost is about 1 million. And you're now thinking, oh, all my income is 500 million naira. How will I just claim 1 million for travel expenses and pay this much tax? Let me increase it to 20 million. Please don't do that. Don't inflate your expenses because they will know. They will ask for evidence. They can investigate. They can come to do their tax audit. And I can't guarantee what will happen to you if they. As a matter of fact, the annoying thing about tax audits is when they come, they're not going to just audit you for the period. They can decide to go 5, 10 years backward. So imagine you've been making these mistakes for the past 10 years and they are just coming today. And they are telling you that the mistake you made, instead of paying 2,000 naira tax, they are now telling you that now you have to pay that 2,000 naira tax and 1 billion penalties and interest. Penalties and interest can be that much. Sometimes it runs into business, billions, especially for large companies. So you will now be, I should have just paid this 2,000 naira to avoid this embarrassment. So you have to be going back and forth. You now need to engage a tax consultant. to help you mediate, to help you beg and all that. So to avoid all of this, please do the right thing from the beginning. These are the tools you can use. Please, are we still with me? Can we just show the emoji so that I will know I'm not
Yes, we
talking
are.
to myself? All right, thank you very much. So these are the tools. We have QuickBooks, we have Waves, we have CBN FX portals. QuickBooks is actually an accounting software and also the Wave. So QuickBooks will help you in presenting your accounts in a good form. You will be able to know, oh, this is my profit, this is my balance sheet, this is my financial position, my operating activities. QuickBooks will help you. So you need tools to actually achieve all of this we've been talking about. The other one is approaches. The first one is choose proper business structure. By business structure, I explained earlier that you can either be an individual, you can register as a business name, and you can register as a company, either limited by shares or limited by guarantee. So look at yourself and which one? They both have advantages and disadvantages. So you can decide to say, this is I think company will suit me better, but no, for now, let me still continue as an individual. Oh, I've reached the point where I need to register my business name. Let me register my brand so that another person will not take the name. So you can start with that. You need to choose the business structure that suits you. And there's no good or bad business structure. It only depends on what you are doing. Another one, keep records. I am saying it again. Please keep records. Keep all your records, detailed records. Then declare all income. All your income, either it is gifts. Your total emolument is actually inclusive of benefits in kind. So if they are paying your rent, declare it. If they buy land for you, declare it. Get the market value and declare it. If they are paying for your security, declare it. The last one here is hire professional tax advisors for compliance. Hire professionals. You will need them. Get good accountants, professional accountants. Get good professional tax advisors. Let them help you so that you'll be able to focus on what you know how to do best. So get people that know how to do their own work best to help you in the things you know you don't have strength in. Anything you know you cannot do for yourself effectively, outsource it so that you will use that time to focus on what you can do effectively. So hire professionals. It will help you. As a matter of fact, I always advise clients not to approach tax authority alone. If you are going to be meeting with them, make sure you are with a professional. So you won't go and say what you are not supposed to say. So we are going to be talking about impact on small and medium enterprises. I added this slide because I know majority of Nigerians, we actually fall within this bracket. The impact of the new tax law that is kickstarting January 2026 on SMEs. The first one is 0% CIT. Your turnover is less than 1 million, your asset is less than 250 million, you are not paying CIT. But remember, the fact that you are not paying CIT does not mean you are not paying withholding tax or VAT. But you are exempted from company income tax, which is 30% to a large company. Then research and development, donations are now available. But the donations, it shouldn't be, when they say donations are allowable, you cannot make profit of 500,000. And you are telling us that you donated 400,000 to charity. They will question it. So your donations has to be reasonable and it has to be something you can also prove. Then your losses can be carried forward. Should in case you make loss in this year, you can carry forward the loss to the next year. So I'm going to conclude with this. Inflation taxation is now mainstream in Nigeria. It is here to stay. Influencers will pay tax. So we should have that at the back of our mind. However, the winning strategy, what you can do is register with FIRS, register with CAC, keep clean records, file on time to avoid penalties and interest, and use your deductions, use them very well. As long as you can prove them, use them. The last one is ensure compliance. Your reputation. If you do all of this, you are complying. You have good reputation. And trust me, when you want to get investors, investors want to check, are you compliant? Do you have good reputation? If you keep having tax issues, people will want to run from you. They won't want to invest in your company or in your brand. It also gives you access to finance. If you have your TCC on time, you are complying. If you need finance from any of these finance, maybe the banks or any of this finance house, if you approach them, one of the things they will ask you is your audited account. They will ask for your TCC because they want to know. They don't want to do business with someone that is not compliant. So then it also enables, it gives room for sustainable growth. Your growth will be sustainable. Thank you very much. I've come to the end of the presentation. Thank you. Over to you, Mr. Victor.
Thank you, and thank you very much for your presentation. So at this point, we'd like to ask, those that have any questions for our speaker at this point. Do you have any question? Okay, we have a question at the Q&A section. Can you please just go through that question, please?
Okay. Okay, I'm saying can all slides be shared? No problem. I will share with Mr. Victor. I'll share the slide with Mr. Victor.
Okay, there's a question here.
I'm not
Are you
saying,
seeing
maybe the
from
question
the
is to
Q&A?
you. No, I'm not saying, maybe the question is to you.
Okay,
You can just read, I will pick it from there.
Okay, for some of us who work out of home and we want to use CIT, can we claim some or all of our rent, utility, and bills for tax credit?
Okay, for some of us, so you work from home. So what you can do is, and you are registered as a company, so you want to also claim rent as your deductions. I want to be sure okay, for some of us who work from home, we can also use CIT. CIT is company income tax, so you are not really using CIT. But if you're asking if you can claim some of your rent, then it needs to be documentation. I talked about documentation earlier. If you want to claim some of your rent, so that means you have a section that you use for your business from your
The
home.
annual rent is capped at 500K. So if
Sorry,
it's above 500K, for
you said the
small,
annual
so
rent
small
is what?
deductions, annual deductions.
Please,
Okay,
can
so
you just continue with your...
okay, if you are going to be claiming part of your rent, then it needs to be documented. So let's say, for example, you are paying rent of 1 million naira. It's a two-bedroom apartment. One room is strictly for your office that you've set up. So you need to have an agreement between the director, that's the person paying the rent, and your company. Your company is XYZ Limited. So you need to have a mini agreement with them that you are, for the room they are using, the annual rent is, we call it sublet. The sublet is, let's say, 500,000. If you put rent as your deductions, the first thing they will ask you is, let's see the document. Let's see the annual rent. Let's see your rent agreement or your sublet agreement. So if you can provide that, why not? You can claim it, you can use it. But you are not using your rent for tax credit. You can only use withholding tax for credit. Rent is a deduction, is an expenses. Withholding tax is the amount that they've removed as tax for you before that you now want to use to reduce your total tax. So I don't know if that is taking. I'm seeing another question on the Q&A. And I think I see someone wants to ask a question. So let me just take this one on the Q&A, then we'll take the hand up. My question is, if pensions are already taxed, do we still need to file pensions? Okay, so let me explain. Pension is usually you are not filing pension per se. So what you do for your staff, for example, your full staff, if you want to prepare their pay as you earn, that's their paying now, their tax. In calculating the taxable income, the minimum wage in Nigeria now is 70,000 naira. I think 77,000 naira, if I'm correct. But if you check that slide I shared, the minimum, the people that don't pay tax is the first 800,000. And if you do 800,000 divided by 12, it's just about 60 something thousand naira. It's not even up to 77. But they will still tell you that people that earn minimum wage don't pay tax. This is why. There's difference between your gross emolument and your taxable income. Before we arrive at the taxable income, there are reliefs that you can claim. One of the reliefs are pensions, your pension, your health insurance, and consolidated relief. So by the time they remove all this relief, you'll be left with about that 60 something thousand naira. So for your pensions, pension is not really, it's just something you are saving for yourself. And you get tax relief for it. So they don't you don't pay tax on the pension you are paying. They even remove tax from your total emoluments before you pay your tax, before they calculate your tax. So I don't know if that answers your question, Alpha. So someone is Osai EMS, sorry. Please, you can ask your question. Thank you, Alpha.
Good afternoon.
Unmute and ask your question.
Thank you for your time. Can you hear me?
Yeah, I can hear you.
Okay. My question is relating to VAT.
Okay.
I actually have a tax promise already. I'm already like 1 year old as a business. So my question is, how do I actually capture VAT and remit it? Because sometimes I even get paid by hand, and that practical part of it, I know that you have to add the money to the total charges and all of that. But most times, like I said, it's by hand, and I don't even know how to fill the columns, appropriate columns. Those VAT on tax promise sometimes can be confusing. Now, I don't really know if you can show it practically how I will capture them, measure the remit.
Okay, so these payments the payments are not through bank.
Yes.
But when they pay you, do they pay you VAT inclusive? Or just your fee?
Just my fee. It's also on recent times I began to take into consideration the
VAT. Okay, the good thing about them not paying you VAT is there's something called self-assessment. So it kind of a little bit exonerates the person that is supposed to collect VAT, but not completely though, because you are supposed to show evidence of you requesting for it and they deciding not to pay. So the person that didn't pay the VAT will be the one to self-assess and pay the federal government. Then talking about how to do this filing on tax formats, I talked about engaging professionals. What you do is, if you open your tax max, you will see your pending filings. You should see VAT filing pending. As long as you're a limited liability company, you will see them. Sometimes, if I also mentioned that even if you don't have any amount to pay, you will still file. The process of filing is filling all those things online on your tax max. Once you fill and click your OK, it automatically records for you as new filing done. But the more you said you've been there for like a year now, so you need to actually go back and fill for all those years, because the more you stay, if they decide to start calculating those penalties, they can add interest for you. So I would advise that it is not to the thing is, don't wait any longer. Now that you know, please start immediately. And as much as possible, if you can, engage a consultant. If you cannot, there's something they call, I think, is it tax ombudsman or something? I'm not really sure. You can go online and even check out to do some of these things. You might not be able to do all, but there are some basics you'll be able to do. Then if you get to a point that you can't move on, if you can afford a professional, please engage one and they will help you and probably guide you. But there are some that you can go online, check the FRS website, see if you can. Then I'll also advise you, please, as much as you can, stop cash transactions. And before they pay, give them an invoice. Let them follow this in, let there be invoice. And if you can also issue a third party that's receipt, if you can issue them a receipt, please do as much as you can. Reduce and also do transactions via your company's account, not your personal account. Before now, the reason why people do through personal accounts is to avoid tax. But now that they want to start taxing personal accounts too, it's better you use your company's account where you will be paying less. Because if you use your company's account and your turnover is less than 100 million, you're not going to pay anything for the year. But if you use your personal account, even if your personal account is 10K, they will still tax it, except if it is less than 800,000. So imagine 800,000 and 100 million. So at the end of the day, it's even better you use your company's account.
All right. Thank you very much. That's fair enough.
Yeah, you're welcome. So let me go back to the Q&A. I think they've dropped some questions. Okay, please, if you have joint tax bought in for your personal business name, do you need to register for TIN as an individual? And since you have joint tax bought in, it's okay. As long as you have a TIN number, it's fine. But you have for your personal business name, please, you should have as an individual too. Because now you are separating your business from yourself. So the thing with business is not you, you are not your business. If you remember when they used to talk about sole proprietorship companies, they will tell you a sole proprietor is liable, but a company, one of the advantages, if they want to arrest the company, they cannot arrest the shareholders. So when they want to sue the company is answering for XYZ Limited, not Mr. Lagbaja. So you are already separated. You can't use the same thing. So you should get TIN for yourself. Get TIN for an individual. Then Mr. Gunnar, I'm seeing very inside. Okay, thank you very much. I have a question. For an influencer who is just starting, I want to start as a company but working from home. During CSC registration, do I use my content name or just the studio name? Karma is important. So can you tell us about choosing business name? Okay, see, when it comes to choosing business name, you're not even the thing about choosing a name for your business. Let me just tell you, it's a full-time work because I've actually done this before. A lot of people are registering, and whatever name you are choosing cannot be what somebody is using before. You can try your content name, that's if it is not already taken on the CAC portal. So that's why you see people that register businesses, they will tell you to submit 3 names. So they will take these 3 names, they will check through the portal. You can do it yourself, actually. If you go online, go on CAC Public, I think CAC Public something. Just check CAC. If you click on the public, you can search for, if you want to use, let's say, Bama, for example. If you type Bama, it will show you if there's any company's name that is already Bama. So you know that I can't use Bama again. So if your content name or your studio name is not already taken, it's fine. You can use any of them. But if both are taken, please, you have to start looking for. And that's why it's always important when you have a brand, register it on time, because before another person will hijack it from you. If you don't register that name, another person can use it and you'll be doing free adverts for the person because it's the brand they know, not the individual. So once you have a brand name, try and register it before you go far with that name. Because if you are not able to retain that name, you will have to, what will happen is when you eventually register with another new name, it will be as if you are starting all over again. So the best bet for you is to, before you go far, you are still new, you are just starting, register. Register as a business name if you can't really go through the process of company. You can start with business name. But if you know you are okay with registering as a company, you can do that too, and that will be fine. Okay, let me check. I think I'm seeing another question from Legalify. I would like for you to revisit withholding tax conversation. Are you saying that after paying VAT, we will still be charged withholding tax? Okay. So I'm trying to see how I can explain it in a layman's language for us to. Let me give you an example. Let me give a typical example. For example, so Mr. Victor, you engage me, for example. Mr. Victor engaged Miss Deborah. Maybe you engage me for me to do your tax, for tax consultation, and I am charging you 1 million naira. So I'm going to be giving two examples, one from the point of an outsider charging you and one from the point of you as an influencer charging someone. So I charge the 1 million naira. This 1 million naira, if I'm going to be sending my invoice to you, I'm going to send invoice of 1 million naira and I'll be adding VAT of 7.5%. 7.5% of 1 million, I think is 75,000 naira. So when I'm sending my invoice to you, I'm sending 1,075,000 naira to you. That is VAT. Then withholding tax, what you will do for withholding tax is when you receive this invoice of 1,075,000, it is your own responsibility to remove 5% from the 1 million for the professional service. So what you will do is to remove 5% from 1 million, which is 50,000. So you will pay me 950,000 plus the 75,000 for VAT. So when you pay me this, I will take this 75,000 naira, remit to government as VAT. Then the 50,000 naira that you withheld from my money, you will remit it to tax authority in my credit. You will use my TIN number to remit it. So at the end of the year, if I'm going to pay my tax, I will be paying my tax less that 50,000 naira that you remitted to them already. That is one example I'm giving. Do you understand that, Mr. Victor? Or is that clear, everyone? This example, okay, thank you, Chimama. Thank you, Bamise. So I'm going to now come from, I am the influencer. Mr. Victor, you are meeting me as an influencer to help you advertise your law firm. So this is what I will do. Mr. Victor, your bill is 100,000. So out of this 100,000, when you are you as an influencer, and when Mr. Victor is meeting you to say, help me advertise my law firm, you say, oh, your bill is 100,000. If you are sending your invoice to Mr. Victor, you will be sending the 100,000 plus the 7.5%, which should be about 75, to Mr. Victor. So Mr. Victor will pay you, he's supposed to pay you 100,000 plus 7,500. But is due to remove 5% withholding tax from the 100,000. So he's going to be removing the 5,000 from your 100,000, then now add it to the 75, which will now be 102,500. So what he will be paying you is 102,500. But out of that 102,500, what belongs to you is 95,000. The 75 is for government. So withholding tax is for goods and services that are vatable. You are collecting money on behalf of the government and you are paying them back. But withholding tax is not a credit. At the end of the year, you cannot claim it because they believe they are on essential, on luxury, let me use that word, on luxury goods. Like you want to advertise, for you to be advertising, that means you have plenty money now. So if you can avoid adverts, you should be able to pay additional tax on it. You want to go to a restaurant to eat, for you not to stay at home and cook, that means you have money. So if you can afford 10K to buy food, you should also be able to afford the 750 naira on top for tax for government. So VAT is not a credit, they are not giving you back. But withholding tax, whatever they remove from your money, you can claim it back if remitted appropriately. So I don't know if I've been able to answer this question of withholding tax and VAT. So I'm going to move to Bami's question. If I include VAT on an invoice for an international client and they don't pay, the VAT, you will not be held liable for what you did not collect. If you did not collect VAT, you are not going to pay VAT. What you will be liable for is when you collect this VAT and you did not remit. But also remember, even if you did not collect and you did not remit, you need to file. There's something they call new VAT returns. Let me put it on the group chat. So you are supposed to file new VAT returns. If you are going to, so if you add it, the only thing is you have evidence that I added VAT, but there are, in our organization, there are some clients too that we send invoices to, and they will tell you that I'm VAT exempt, I'm not supposed to pay VAT. You really don't have to argue with them. You go ahead with your business. The only thing that will happen is the person that did not pay you VAT should do a self-assessment and pay to government themselves. So if you've enjoyed some services that you did not pay VAT for, what the government is expecting you to do is go back and look at them and meet the government by yourself. Then you pay them. So if I include that, okay, so I think I've answered this. It's not a compliment, but business name. Okay, if it's not a business name, they treat business name just like personal. So business name is subject to tax under the PIT. The only difference is they are registered with CAC. So as a business name, at the end of the year, whatever profit you are making will be charged based on that first 800,000, next 2.2 million, next 1.8 million, like that, till the next 50, above 50 million. So that's for business name. The less than 100 million, does this include limited and business name too? No, less than 100 million is just for limited liability companies and PLC. It's strictly for companies, not for business name. So if you make less than 100 million as a company, you won't pay CIT. Business name is treated like an individual. What is the purpose of VAT certificates and business with businesses without VAT? Okay, it is important to have your VAT certificate. As a matter of fact, there are some contracts you cannot take, you cannot embark on without this VAT certificate. There are some proposals you cannot submit without VAT certificate. The thing is, the importance of having some of these things is for you to be able to, we talk about sustainable growth and we talk about reputation. We talk about being there. We talk about attracting investors. People are more comfortable to do business with people that are compliant. So if you can show them your VAT certificate, you can show them your TCC, they have this level of, there's this level of trust they have for you than for you not to have it. It's not everybody that really needs to get that certificate. But if your turnover is above 25 million, please get it. Because you need that VAT certificate. I think it's renewable. I'm not too sure about the VAT certificate thing. But as long as approach your FIRS, get the VAT certificate. And also, I'm going to say it again. Before you approach FIRS, always, that's why they say engage professional tax advisors. Always, because they understand their language. It's a tax person that understands the language of a taxman. So sometimes that's why sometimes you see all these tax acts, you see them, you are reading them, it's not even making sense to you, you don't understand. That's because you might not really understand that language. But if you are able to sit with someone, maybe you are able to engage a tax consultant, some of these things they can tell you, oh, you don't need this. And as I'm talking generally now, because I'm speaking with people that might be doing different things. But when you as a person engage a consultant, the person will ask personal questions about your organizations and will know how to advise you better. So it is very important you also engage tax consultants. So I think this is the last question here, and I don't know if that is all for me. If that's all, thank you very much. Thank you for your time. Thank you for engaging. And thank you, Mr. Victor, for having me.
Thank you
Please, I have
very
a
much.
question.
Okay, what's that, please?
Okay, my question is concerning the small company and the big companies. So you said that the small companies, the minimum tax is about 50 million, if I'm not mistaken. I'm just setting an example. So I want to ask, is it necessary for the small companies that their revenue is not up to the stipulated amount? Is it possible for them to still go through the process of auditing their accounts, like the audited financial this thing for filing? Is it still
Yes,
necessary?
it is compulsory, not just necessary. All companies must audit their accounts and file with, because you're not only filing with FIRS, you're also filing with CAC. And what you file with CAC is your audited financial accounts. The only thing is you are filing new tax. The nil that I'm saying is like none, no tax, zero tax. So the difference between small company and large company now is when the large company, when they are going to pay for tax, are remitting their tax. They are remitting maybe 100 million tax, 200 million tax. A small company will be remitting zero tax. So you still need to do your audited financial statements every year is actually compulsory for all companies. It is compulsory because you are supposed to also file your accounts, your returns with EAC. Thank you.
Okay. Thank you very much. Before we round up, does anybody have any further questions?
Yes, sir. I have a question.
Okay.
Okay. It's not really a question, but a request. Um, I'm based in Benin City, Edo State. And to be honest with you, I've been doing business for like a year or two. I can hardly see guys who does this kind of thing that you guys do. I don't even know where to turn to look for experts. As Diola advised, to look for experts. Where do I get them? How can you guys help people like us in Benin? I know they are here in Benin City, but
Okay. Okay, so now I'm going to give an example of my firm. We are a firm of chartered accountants. We are into tax, we are into audit.
circulate that around my guys who are also in.
Sorry, I think. Please, can you take that again? The line, I didn't get the question.
Okay. Can you hear me, please?
Yeah, I can hear you now.
My dilemma is this: it's both for you or to legalify himself, whoever can help us. In Benin City, I'm based in Benin City, Edo State.
Okay.
The experts, I don't know where they are, honestly speaking. So, is there any way you guys can help us, give us contacts here, or give us a lead who we can talk to one on one to give us advice here and there? And when we need to do filings, for instance, we know who to talk to.
Okay, that's for Bini, right?
Yes, Benin City.
Okay, so I'm going to, I'll work on that after this meeting and reach out to Mr. Victor if I'm able to get any contacts. But for now, no name is coming to head for Bini. But I'll discuss with my colleagues if I'm able to get someone that can help you through that in Bini. I'll reach out to Mr. Victor and you can get the information from him.
We appreciate that deeply.
Mm.
Okay. So basically, if you need any help in regards to that, you can reach out to us. I believe most people that attended this event, have our email info@legalify attorneys. You can always reach out to us and we'll definitely, help you in regards to that.
Okay, so I think there's a question here. Is there a place where we can read up on tax laws and what we need to do as business owner? I used to tell people, Google is your friend. If you go on, there's nothing you type there that you're not going to find. So, and you can also go on FIRS website, CAC website, they are all there. If you even go on YouTube, you will see a lot of videos. We are able to search well. You will see things that you can listen to and read that will help you. Thank you.
Okay, thank you very much. For want of any other question, we'll be rounding up now, and we are a little bit even beyond our the time frame we gave for this webinar. So we'll be giving 2 gifts for every participant of this webinar, and one of those gifts is about taxation, about this tax law and how they apply in various sectors, each and everybody plays in. So if you're in whatever sector you are, these particular gifts that we're going to give you, discuss, how some of these tax law apply in your particular sector. So please watch out for that. If you have not registered, that means you don't have your email. That means we cannot reach out to you. Please kindly register. You can, send a mail to info@legalify@bunines.com, and we'll give another link here, so that you can register just in case you have not registered. So thank you very much. We are grateful. Please show some emojis for our guest speaker. If you got massive value today, just thank her by sending some of your message. Hello, who is that, please?
Yeah, good afternoon.
Good afternoon.
Somebody was asking about where are the experts in Benin, or I think the person is speaking from Benin. Just want to add in my voice that in today's world, you don't need an expert staying in Benin or anywhere. It's for you to get in contact with people that are suitable to do your job. So if wherever they are located in Nigeria, it's just for you to establish that they exist and they can do the job. So your tax can be filed. The tax is filed through Tax Pro Max. Don't need your physical presence. You need your data to do that. So I'm also a practitioner, a general accountant, a tax consultant. So you can also reach out to me. My email is here. So Legalify, I can send my information to those that I need. Thank you.
Thank you very much. So if you want any assistance in regards to your taxation, please shoot us a mail. We will definitely get back to you immediately. So thank you very much, and let's wrap up this webinar today. We thank everybody who has been a participant here. And we massively thank our guest speaker for our time. And so if you're already registered, look out for a link to the video of this webinar. Look out for our two gifts that will be sending out to you. And also look out for the PowerPoint presentation of our guest speaker today. So thank you very much. We are grateful for your time. Thank you. Thank you, everybody. So we'll call it a day, and we'll always continue to, mail you or send you an email for any other webinar we'll be having, anytime. Thank you very much for your time.
Thank you so much.